Hey guys, and welcome back to another Sunday video. I'm excited to be back on the charts with you, taking a look at some setups for the week ahead. And first thing I got to show you guys, you ready? Let's look at it. Here's the damage. We are currently sitting in a EuroCAD short that has gone not so hot. In fact, on the close of last week, we were almost stopped out of this trade. You can kind of see my initial logic, which now, of course, looks silly. Here's EuroCAD. I shorted in this zone. Initially, actually, my entry was beautiful. Like my first couple hours in this trade went really, really well. Took the trade, launched down here, almost got to maybe a half R. We didn't quite get to 1 R, which would have been around here. But in that case, we had that trade start out beautifully, rejected this area, and then started shooting past this level. And if it keeps going much further, I will be stopped out of the trade. And that's how my week is going to start. I just like to show you guys when you watch my videos, the real trades, no nonsense. I don't know, I find it a little bit frustrating when I jump into trade ideas videos, but then people never actually show you any real trades. They never show you anything that they're doing. They never put their money on the line, right? I hope that you know by watching my channel, you will see the ups and the downs as a trader. And I invite you to subscribe if you haven't already. Let's look at the dollar, you guys. DXY going into this week. Check it out. Let's get it. So taking a look at US dollar, we have to admit here that we have not held support nearly as well as I would have expected it to. So last week I took a couple losses on the US dollar pairs. After having a really incredible couple weeks, my win streak ran out. And took a couple L's. So we were looking at this level. You had this area of support, which totally turned into resistance. We broke through that level of support, retested it, sold. We've been seeing pretty good evidence of rejection here from US dollar bears. And the question is it time to totally bail on the bullish US dollar thesis that we've had on the channel for several months? I don't quite think so, but we need to, at the very least, we need to see something come in on the daily chart because we've really started to reject pretty hard. We topped out around 109 and the dollar started dropping. So if you're looking at US dollar pairs, dollar yen, dollar CAD, dollar Swiss, euro dollar, pound dollar, etc., if those are things that are on your watch list here this week, then my personal opinion is we got to be very careful that the dollar is not trying to make a bigger pullback at this point. And it looks like it is. Like it looks like the dollar has room with that bearish structure that I showed you on the lower time frames. Looks like it has room to come down to a level like 105. And this would be a healthy retracement in a longer term trend, but in the short term may be in order for some dollar bearishness in the very short term. So we'll talk about some interesting things today. If you stick around to the end of this video, we may talk about things like gold. We'll talk about the pound, the euro, and speaking of that, let's look at the euro. So the euro against the US dollar, I still remain bearish on this currency pair overall, but I think that we again have some room for some dollar weakness to drag this currency pair up. Remember, if you're newer to this stuff, when you're trading euro dollar, if we think that the dollar has more downside based on the market structure that we just identified, we're saying that the euro could appreciate relative to that, especially with the euro so beaten down. So let me talk about two trading scenarios. Let's say that scenario number one is you actually agree that we have upside for the euro dollar in the short term, which is kind of what I'm thinking. Short term, I think that the euro dollar has room to expand up to this 1.044, 1.045, etc. So that doesn't, by the way, that doesn't bode well for my EuroCAD short. But again, I'm just seeing if that trade's going to stop me out on the open. We'll have to see. But anyways, what I'd like to point out to you guys here, for euro dollar bulls, I think that there may be an opportunity to look for some market structure breakouts and perhaps look for some long ideas up to that previous high. So to the credit of the bulls, we bottomed out around parity, 1.000. We rallied. We've been finding support in the meantime, pretty strong from momentum buyers who are trying to pick this thing up as it starts to rebound. Now, again, I think that the rebound is limited personally. I think that at some point there's a nice shorting opportunity, but this still gives you a lot of room to move to the upside. That's about 200 to 250 pips to the upside. So perhaps some trade setups for you to think about if you are a short-term bull on the euro dollar would be these levels here. these are going to be your key spots in my opinion. You're looking left and you're saying, okay, this is where market structure is. Market structure, so what we could say is market structure, and then specifically that's like the 4-hour resistance that we highlighted or we've talked about just a moment ago. So again, on the 4-hour and the daily chart longer term, I'm liking this area, but in the shorter term, we just have this little market structure to overcome. So if that comes into play, like if we break through those levels, to me, there's that opportunity for any pullback to be a short term. Again, not something I'm not saying I'm betting on the euro for the rest of the year. I'm just saying that in the short term, there may be that swing to follow up and get us up into that zone. Now, from there, if we are talking about this from a daily chart perspective, which is, I know, a lot higher time frame than what some of the what a lot of my audience is looking at. But from a longer term perspective, I think at that point, you start talking about an opportunity to potentially get some longer term shorts in to take euro dollar back down. So there's my opinion on the euro. I think short term, we've got some nice momentum to the downside on the dollar, which could lead towards a bullish euro dollar. I hope that's helpful to you. If you enjoyed that, make sure you hit the thumbs up button. Let's keep going. Let's take a look at GBP USD, which is going to be our next one here. We'll talk a little bit about the pound dollar. And by the way, you guys, we just got the Edge Finder, all the new beautiful looking layout. We just got it finished, so check it out. We're really excited about this. But I want to look at pound dollar with you guys and see what's going on. So we are bearish on pound dollar. A sell reading here of a -4. And let's discuss this. So there you go. Everything's loaded in. By the way, we added an upcoming calendar. For those of you guys who are using the Edge Finder, check out the new calendar when you get a chance. You can see upcoming events, things that will impact your trades potentially, will show up in the bottom right. We've also added this thing. This is a text generation of what. So if you're ever confused, we decided it would be best to do a output summary and generate this text with our software. So we had the developer work on this past week, and we got it in there. So now if you have any questions about what the score is and how things are being computed here, this automated text will tell you all about the idea. So if we were to take a look at this one, GBP USD, on the charting perspective, we jump back over to the chart, daily chart, let's start here for a second. Really strong overall downward trend. We are retesting as we speak the 20-period simple moving average on the daily chart. And we have all three moving averages in line. So for me, until further notice, with a sell reading from the Edge Finder, from a nice technical retest in a downward trend, there's an opportunity, in my opinion, to look for some shorts on GU. Okay, so let's straighten this out here, and we'll take a look at the price action and see what's been happening. So again, we've consolidated recently. We do still have resistance trying to hold here. We have resistance if we look left here. So marking these two areas, these would be areas for me, I would say, where I would be very happy to potentially look for some setups. In fact, we're really close to that current area now. So remember, if you watch my channel for a while, if you're newer, let me explain something. When I take trades, what I do is I generally use a fairly tight stop loss. I'm a swing trader, so my stop losses still end up being things like 50 pips, 75 pips, just depends the currency pair or the asset that I'm trading. I'm taking a trade here, let's say, and I decide I want to risk 51 pips. If I'm right about this, what I'm going to do is I'm going to trail my stop loss. It's something that I've done for a long time now. It's my strategy, it's my style of trading, is I use market structure to trail my stop loss. And then I use, in these videos, I just use the green film here just to show like where I think price reasonably could go if we, basically respect the idea that I'm thinking of. So that already gives you like a really incredible risk to reward. It's like a 5-to-1 reward to risk ratio. Now, if we were to copy this over and take a look at this, now what have I done? I've created two different trading scenarios. I'll tell you what, you guys, a lot of times when you guys watch YouTube, I said that weird, YouTube, Instagram, Twitter, whatever, you're going to have people who make it seem like through their posts that they have like a holy grail system that wins 90% of the time with risk rewards like this. Nobody is doing that. You know how I know nobody is doing that? Everyone, you'll see people who show like a screenshot of a trade that goes like this, and it's like a 30-to-1 risk reward or whatever, and they're like, look, I'm a sniper. Well, they're choosing to show you what they want to show you, first of all. But number two, they'll never drop a MyFX book to actually prove that they hit wins like that all the time, because they don't. That's just not how the real world works. If it was that easy to catch trades like that, everybody would be so rich they wouldn't even, they would just be sitting on a beach somewhere. I don't know. But anyways, here's the thing. What I will do with my trading, realistically, is I will take more than one attempt if I need to and really like a trade setup. So we've mentioned that for several reasons, I like GBP USD short. And as we come into the first level of resistance, I may take what I would call a try or a attempt at these levels. So I'm going to try out this level. I'm going to put a stop on my trade. So if in case this try works terribly, I'm not going to take a big loss. I'm just going to take a small loss. But then maybe later this week, we get an opportunity and it's like, okay, well, that one sucked. That one didn't work out. But then we pop up into another level that looks really good. And this one may work beautifully, right? So again, I'm not so arrogant or naive to think that the markets are just going to listen to my level and I'm going to win 90% of the time with a risk reward like this. I understand that if you keep your stop loss tight, you're very likely to hit a lot of stop losses, and that's okay. I lose more trades than I win, but when I win, I'm able to make them count for me, and that's really what has kept me in the game for so long. Again, that's kind of the key. So there's GU. I do like it short. Again, if we go back to the Edge Finder, a couple things I wanted to add here is if we look at the scanner output and take a look at things ourselves, so you can see that we get a -4. We get to use this as an example, by the way. We can see that GBP has a long percentage of 26.7%. In this category here. This right here, you guys, this is our institutional positions tracker or our COT, smart money tracker, etc. We can see exactly what big money is doing on the futures market with big currencies like the US dollar and the pound. So when we look at this, we see 80% are long and 26% are long on the GBP. Okay, that's a bias towards USD. So in this category, we actually get a -2, favoring the dollar aggressively and not wanting the GBP, which is exactly what institutional or smart money traders are up to on the commitment of traders data side. All right, so then we can continue down the list. Retail sentiment, the crowd. What is the crowd doing? Well, right here we can see that the crowd, when looking at GU, is buying the pound dollar. So if they're buying the pound dollar, and we know that they tend to lose money and hold on to losses, that's where I don't want to be, right? So I actually want to be on the opposite. I want to be looking to sell this currency pair. Seasonality, this one's a fun little study that we've started doing here. Look at this. The month of July and the month of August are, historically speaking, pretty negative for the pound dollar currency cross. Again, this is how we stack things in our favor, you guys. A lot of times people are sitting out there and all they do is they look at chart patterns. And I understand that that's cool. That's what's on YouTube. That's what's easy. But having data to back your trades, to me, is game changer. That's why we use the Edge Finder here on the channel so much. And this is why I have basically my employees, my staff, working on building software like this all the time. I use it in my own trading. We also sell it to people who want a copy. And if you want a copy, there will be a link down below in the description. If you get access to it, use the promo code that's down there and you'll get access for a super discounted rate. Check it out down below in the description. Punch in that promo code and you'll get access to our market data there in the description. So there you go. Again, you can look at any currency pair that you want. We have several on the list. We also have, of course, commodities. We have commodities. You can look at gold and oil. You can look at the indices, the SPX 500, US 30, UK 100, etc. So whatever you trade, you'll be able to get scans on them in real time anytime you'd like. It's kind of a very cool tool that I'm very proud of and we've been working really hard on. Anyways, let's move on. We'll take a look now at USDJPY. Then we'll get on to some things like gold. Okay, so I got crushed on UJ last week. Did not hold out as well as I was thinking, but I gotta say, overall, I've had a lot of trades recently. I've been trading this currency pair again, and look at this. I bought here, closed, bought here, closed, made some money. And then this happened. Bought here, lost. Bought here, lost. So took 2 L's, took 2 wins. So, of course, you know, not ideal. We mucked it up a little bit, but it's okay. We're still going to be looking for more trading setups here going into this week. I don't know how much I want to buy dollar yen at this point. With those big red candles here towards the end of last week and the dollar being very weak, I'd like to see the dollar stabilize a little bit here before I look to try and get long again. And I also have a couple other setups that I like right now. But UJ still in a technical uptrend. I just think that we may be seeing a bit more of a retracement than I first anticipated. And we could be seeing, if we take a look at the 4-hour chart and get our moving averages off there for a second, we may be seeing a move down to levels like this. Levels like this. So again, overall, longer term, the trend is still up. This trend is still intact by all means. But I think that we may be seeing a bit more retracement than I had first anticipated. I was thinking we would hold these levels. That was my initial idea with the trade. We made money this time. But on the retest again, I tried to get back into my trade and it did not quite work out. So we made a little bit of money on this one and then lost a couple of trades here. So looking to retry UJ. If we start getting a deeper retracement, a little bit longer term, there may be some setups. Again, remember, we're setting up more than one idea usually when I'm taking positions. So for example, maybe I'm taking a trade here. And I'm saying, okay, well, maybe I can catch something there. That might be a really great risk reward. That's a 4-to-1. Beautiful. Okay, well, what if that doesn't work? And I look left and I say, well, the next really key spot would be right around 132. The risk reward can be amazing there too. What if I just lose both trades? Well, then that would happen, and that's happened to me plenty of times. But oftentimes enough, often the first trade's great. Sometimes you guys, the first trade is great, we make money, and then the second trade is great. Sometimes the trade goes bad and then the second trade's great, and of course occasionally I just get it completely wrong and lose both trades. In that case, what we do is I just reset and I stop trying to trade the same asset over and over. I look for a chance to take it back at another point. I just don't try to keep chasing the same asset over and over. But I will oftentimes take 2 to 3 trade attempts on the same currency pair or cross to if the setup is there, right? So anyways, next let's take a look at gold here and see what's going on with XAUUSD. And look at this, you guys. This was exciting to me last week. We marked out zones of resistance right around here, right? And at this point, we have officially seen a breakout of this area, which was beautiful. And not only that, look at this. We broke out, we retested, and we found buyers. That's so key for gold bulls. So for gold bulls out there, this is kind of our new standard spot, right? This is going to be the spot, in my opinion, where buyers have to show strength. Because what we don't want to see is we don't want to see this level break and just turn into resistance and this just be another failed attempt to go higher. Because we've had enough of those, right? We've had a lot of instances where price pops and then just gets sold, pop, sold, pop, sold, pop, sold, right? You can see. So we need this one to hold. And that's a great sign that we're starting to see that. So perhaps if you're bullish on gold, maybe a retest of this area with stop loss could be an idea to think about. And then maybe just as equally would be to see, this would be the ultimate, in my opinion, would be to see if we can break and retest this spot. If we can start getting a break and retest here, I think gold has opportunities to really kickstart into a strong bullish move. One thing that we were discussing in the A1 trading community here in our Discord recently, we were talking about how if you take a look at gold, pull up the gold chart here on the Edge Finder, look at this. We're about to go into August. Which, this is so cool, you guys. August is the strongest month of the year, historically speaking, for gold. It's so fascinating. So this is why we do this study. And if you're trading gold and we're about to go into August, you have to just at least consider the fact that, okay, well, we've been beaten down quite substantially on gold. We're seeing early signs of price actions turning bullish. And we have seasonality that is pretty unmatched compared to the rest of the year. August is historically a very strong month for the gold market. And again, we're about to go into August, seeing some signs of price action. And if history repeats itself, as we saw in the Edge Finder, it could be another positive month in the books for gold. So going to be very interesting to watch. That's another reason, again, why we implement that in our software, is to add that to the score. We want to see if seasonality is in our favor, because if you know that historically a certain month is more likely to be positive than negative, that can be useful information. So again, watching gold very closely. If you're looking at this thing going into this week, again, nice start here, big legs up, big strong moves, and now any retests, in my opinion, could be nice buying opportunities, especially if we get that bullish August run that we've just discussed based on historical readings. So kind of intriguing. Again, seasonality is a huge component to one of the things that we study here at A1 Trading. It is why it's on our Edge Finder for all of the different currencies and commodities and assets that we trade. Check it out and use it yourself if you want access. Again, get it down below in the description. There will be a promo code and link to get the tool if you want it. So I hope that you take us up on it, try it out, get access to it. It really is such a game changer tool. I use it for my trading every single day now. I never trade without it, basically, because it scans for all the things that we used to have to do manually: fundamental analysis, technical analysis, sentiment and commitment of traders data, seasonality, all that stuff at the touch of a button. I know I am selling it. I'm hyping it up, but it's because I genuinely love the tool that our team has created. I couldn't have done it with all the developers and team here at our office, but this thing has become so game changer, and so many people have been loving this thing. We've been getting so many positive messages and reviews about the tool, and it's, from our perspective, you have to just put yourself in our shoes. We spent months digging for data, building the ideas, constructing the way it lays out. So to have people telling us that they love the tool genuinely is so flattering and so exciting for us. So I hope that you get a copy. I want more people using it. I want more feedback. I'd love to hear from you guys what you think we can improve, how it's helped you, or what you think could be better about the tool. Please reach out. Let us know. We are always open to listening to feedback and continuously improving our software. So thank you for watching today's video. If you guys enjoyed this, hit the thumbs up button, subscribe to the YouTube channel if you're new, and see you next time.